got yet another investor in Reliance JIO. This time it's KKR. Ajay, talk us through the contours.
Well, week after week, marquee investors are piling on to take a pie of JIO platforms, and this morning is no different. Today, it's KKR, the American private equity company, which has picked up stake, 2.3% stake, for almost 11,500 crore, making this KKR's biggest investment in Asia. This marks the fifth check coming in for JIO platforms. Remember, in the last couple of weeks, marquee American investors like Facebook, private equity giant General Atlantic, Silver Lake, all of them have picked up stake in JIO platforms, totaling almost 80,000 crores. Not only will this money be utilized to reduce the mountain of debt Reliance Industries is sitting on, almost 1.5 lakh crore, but also to make JIO platforms a completely high-grade technology ecosystem towards which they are actually moving. So another feather in the cap as we move towards completion of the rights issue as well, which will get completed on 3rd of June. So another good news coming in for Reliance Industries shareholders this morning.
Okay. Thanks for that, Ajay. Devan Choksi joining us. Devan, what are you making of it? The fifth check that's totaling close to 17% that we're looking at, 78,500 crores altogether. We've already been talking about how this is a boost for RIL, but in terms of how much further we can see the stock price move, how much this really impacts the debt of the company now in totality, talk us through the implications.
So, good morning. Well, I think the important aspect of a couple of questions that you have added into your question, the debt part of the component is certainly coming down with this particular money coming into the company, and with 78,000 crore already into the books of the company, I would think that the situation would be far more easier for Reliance to basically manage their cash flow going forward and before time. So that is given. Importantly, I think each and every investor that they are bringing into the company, they bring some kind of a strategic value. I was going through various investment portfolios of KKR, I think, which they have made an investment. One of the interesting companies in which they have made an investment is Ajay Health, I think, which is California-based US company. I think they are basically into the medical device platform, which basically picks up, early stage companies which are having growth potential. Now, Reliance, basically, as we know, JIO platform, basically, they require, such kind of verticals, healthcare platform included. I think they would be finding strategic value of such investors coming into the company. So I am more clear that going forward, when companies like JIO platform would start looking at the valuation unlocking, from listing in the global market, such marquee investors list, would probably help them fetch better valuations. And that is where one should be more comfortable going forward in JIO investment strategy.
Devan, how does one go about figuring the right value for Reliance? It's a sum of parts story. The GRM and the petrochemical business, the sum of part comes down. JIO and the new investors are going to take the sum of part for the JIO business higher. What is the right way of understanding that, look, this is the new Reliance. I'm going to mark down the old businesses, talk about higher valuations for the new businesses, and then come with the real sense?
It's a very pertinent question, Nikunj. I think the current businesses, the consumer-facing businesses, they have one typical character into them. They would probably eventually work on a negative working capital once they would be on a full-scale operation. Because whatever the amount of money that they collect, either by way of a subscription model or a transaction-based model in different properties, they would probably have money collected first, and they would be incurring the cost at a later part of time. So typically it's an FMCG kind of a model where you have the opportunity to work on a negative working capital. So that is one positive aspect. CapEx program is high, but once the operations gets into the ground, definitely this is one positive thing which one can count for. Second thing, the JIO platform alone is showing the visibility of going in the direction of around 25,000 crore EBITDA in a 12 to 18 months time from current levels. So this is one important thing which could possibly, bring them up as far as the valuation aspect goes. If you look at the international markets and if you see a lot of startups, probably you don't find many startups with a revenue-making proposition, revenue-making proposition, yes, but not profit-making proposition. Here is a company which is having both the revenue as well as the profit-making proposition, at the same time, I think, growing in size in different area of activity that they are doing. So as I see it, I think the global investor would probably find merits in this complete model that this company has developed. And that is where I find that the valuation could be on a higher side. Currently, between the two businesses, the core business of Reliance and I think the new business, consumer-facing business of Reliance, in the JIO holds around 5 lakh crore kind of a market cap, and the other business is already 5 lakh crore market cap. As I see it, the core business will continue to, I think, produce performance when the situation when the normal gets normal in the global economy. And this new business will add on to further. So yes, I think one could possibly, spell out numbers at some point of time in a detail. But I feel that the valuation would be driven largely by the consumer-facing platforms, particularly JIO.
All right, Devan, thanks so much for joining us this morning. Let's take a very quick break.